estate 2025, investments, just real estate and residential sales, the economy, the kind of whole shebang world, what's going to go on with the dollar, interest rates, everything. So I'm getting that question a lot. What to do? Are we moving? Where should we go? Where should we buy? Neighborhoods? When should we buy? The dollar? Should we invest in Australia, Canada? Yeah, we've been looking at both our places ourselves for investments with our family, which is amazing because our dollar is so powerful right now, which is also not good for the economy, apparently, from some investors. The bond is going up. So again, interest rates are not going to be coming down. They changed it from 3 cuts to 2 now. So we'll see what happens with that. And again, you can buy bonds, but they're at 2% a year, barely keeping up with inflation, if keeping up with inflation. Inflation's supposed to go up. So with all that said, what are you going to do? Are you going to buy a home this year? I believe so. I think real estate's one of the most stable investments there still is right now, especially with everything going on in the market. Now, where are you going to buy? I mean, Australia is amazing. You can get like a citizenship or visitor visa for 12 months and go down there and you can keep renewing it. The buying process takes 60, 90 days at the most. And I've heard 60 days and talked to a few brokers down there with Americans buying a lot down there in Australia, especially for investments for vacation homes, secondary homes, short-term rentals because of different locations down there. Amazing. Same with Canada. I mean, now Canada, you can't stay as long. You can do the 6 months. You can go back and forth. But vacation-wise, short-term rentals, again, with the dollar, absolutely. Or take your pick around the world. I choose Australia and Canada, a little safer and a little more controlled in my view, but it just depends on everything. Inflation with the dollar, what are you going to do? Because it's going to be rough. I'm having a lot of investors call and want to go and buy multifamily now because, yes, a lot of less people buying still with single family homes and the buying power is a lot further down. So rentals are still big. Yeah, multifamilies are still secure. I'm seeing a lot of people cash out of their multifamilies right now because it's a good time to cash out. And there are investors looking for multifamily. I'm still hit and miss. I like single family investment homes or duplexes, fourplexes. So I'm a little multifamily. But again, some of the bigger ones, if you can find a great investment that hasn't been updated in multifamily for at least 10 years and the rents are low, you can come in there and do paint, some small remodeling. Maybe if you have the stomach for it, a little bit more of a remodeled kitchen or baths on those multi-units, depending if they're 10, 20, 30 units. And we're at a lot in the Midwest that we are looking in a few different states over there as well. Wisconsin, Minneapolis, down through Kentucky. Just depends on the different locations where we're looking along with taxes. If the multifamilies are good and we can pick up a really good deal where we can make a quick 400,000 or 500,000, the problem is cashing them out depends on if the investor's there or not, or if we are going to have to hold on to them. So you have to be careful with that on what you're doing. If you're doing holding those multifamilies, absolutely. If you can turn around and the NOI comes out good, then fine, fair enough. You can actually make some really good deals right now. I just found one for 900,000. That is prime location, hasn't been updated since 2008. It looks amazing. So that one's on top of the list. I just printed out the PDF. So if you have questions on investments, call me anywhere, world, what we're doing, different locations, the dollar. What do I think is going to happen with the economy? I have no clue. I mean, we'll see what happens with Trump. We'll see what the new administration does. We'll see how long we either ride a wave of high to low. I've been watching a cool Netflix documentary on is the Cold War coming back with Russia and China. Abso-freaking-lutely. What did someone from the embassy in Russia just said? That's the beginning of the Cold War. Netflix came out with this months ago. And so it's fun to watch all of this. And I shouldn't say fun, but it's interesting. We are living in history right now on world economics and wars and the economy. And yes, are we back in a Cold War with Russia and China? If you don't believe so, then watch the news because there's a crazy amount of stuff going on everywhere. Does that affect everything? Absolutely. Does it affect our dollar, our real estate, economy as a whole? Absolutely. What's going to happen? No clue again. No clue. So all I can do is make sure I focus forward, make sure our investments are safe with the money and the properties we're buying. Are we diversifying more and going different places? Absolutely. Is our dollar extremely strong right now? Absolutely. Even just taking money, and if you ever plan to just go to Australia or Canada for vacations or even New Zealand right now with their dollar, go ahead and do some currency exchange and grab that money while it's low right now and you're getting 50, 60, 70% off depending where you're buying. Canada is what, 40%, 43. Just take a look at the exchange rate, currency exchange on Google, or if you need some places to exchange your money, there's tons of them you can go on there. And you can even get the preloaded debit cards or credit cards with the exchange rate, which gives you an amazing rate. They barely take anything from it. Some are like at 2%, so you're still getting a hell of a steal, and you have these loaded up cards for vacationing. I mean, just think about it. You're already planning, and you're getting 50% off or more if you ever go down there, or even use it for a rental for a few weeks or whatnot. So that is a new kind of gold rush. I am seeing a lot of people say Airbnbs and VRBOs are oversaturated. Yes and no. I've heard mixed reviews. I think it's all about location again, and that's with real estate anywhere, but it's about location. Is it waterfront? Does it have the right amenities? Good pictures? Is it marketed well? Good communication, quality control, everything like that with the Airbnb and VRBOs or Verbos. I mean, yeah, it just depends on what you're getting and what you're marketing and location and the demand. I think economy on the whole in the world, the market is definitely going to go down with even vacationing, going out. I mean, everything's going to dump again, I believe. Now, does that affect real estate? Yes and no, because once it starts going down like this, we are getting more and more buyers still wanting to buy, still wanting to get in the market, and we have tons of them. And then sellers, where are they selling? A lot of the older generation are starting to cash out, but some of the locations just aren't key. Some of the buyers don't want it, or to be honest, some of the price ranges are way too high still. Like it just, those price ranges aren't moving nearly as much as first-time home buyer price ranges. So that's why I like the single-family homes for investments, because I'm able to turn and burn them quicker if I need the cash. So if I have a single-family home investment and it's the mid-range, it's a rental, it's 400 to 600,000, I can sell that a lot quicker than multifamilies at millions and millions of dollars, and there are tons of them on there. And there's a lot of investors still trying to cash out of those multifamilies, and that money is just stuck there. It's stagnant, and that's tough. Yes, they're making a good investment, but you gotta remember, I just posted some Scrooge McDuck from Disney and how he says money, if it's stagnant, if you're not using it and you're not flowing it through a river and growing it, it's gonna not keep up with inflation, which we all know, everybody can tell you that, but it's also not making you any money. It's not going. So yes, these multifamilies, big ones, they are still bringing money in, but I guarantee you the reason they're trying to sell those big ones is because they know they can diversify and make so much more money in different locations. Even buying gold. If you have good chunks of money, you can even buy gold and play that market if you want. And that's always a safe market to buy, or safer, I shouldn't say 100% safe. But with regards back to real estate and the macro and micro and the whole world and everything else and what's going to happen again, I don't think anybody can truly tell you what's actually going to happen. I think you need to make smart decisions and safe decisions on, okay, where am I taking this investment? How quick do I need that money back? Where can I get good quantities of money in return for the investment I'm putting down? So the NOI again of what we're doing. We bought a commercial building off market, true cap, we're 9.8%. We got a 5-year contract with a national company that's leasing the building at double net. So I'm getting taxes, insurance, and rent. I mean, it's huge. And that was a great buy. Not only that, the equity I made on it with everything going up, and we freshened it up here and there, some paint, some light cosmetics, did some nice stuff for the store, but nothing crazy, 10, 15, 20,000. Our equity on that alone, we made another 200,000, 250 if we ever went to sell it. And with that nice national contract, it would be easy to burn. We don't need to, but that's simple. And the price range is nice, and the location, 100% best location I think we've bought to date. I mean, Target there, Starbucks, 7-Eleven, like everything's around. The zoning's 100%. Do whatever you want, build up apartments. Perfect location. I don't think I'll find, knock on wood, I find something like that again somewhere. Like that location. But again, that comes down to location, hunting off market. And I think a lot of these off market ones are great, but there's still a lot of good market ones on market that you can find. For example, I have a bunch of off market investments as well that we can do one-time showings on. So if you are looking for an Olympia, Washington, single family or multifamily, some smaller ones, give me a call. That is the best thing I can do for you, as well as, okay, I have cash. Now, see, the problem is, we're not just giving it away. We're not just saying, oh, here, take 50% off the dollar. No, we're giving it at a good price. You come in and do it, take care of it, refreshen it. And I think that's the hard part, is a lot of the savvy investors want the 50% off naturally, like what we found. But if you're just getting into this, or you just want a good deal, or you need to put your money somewhere, there's still a lot of great investments where you can make a 20% return, 25% return. And depending on the price, that's not bad for what's going on in this market. There's a lot of auction homes that I'm watching right now that are actually selling, more and more auction homes, and a lot of them aren't even making an auction because you can call those auction homes and try to snag them before they even go into auction by making deals before everything's done. So with real estate, with regards to money, absolutely. You can still really safeguard your money, fight inflation, go up with equity in the real estate, no matter what you're buying, no matter where you're going. I think some countries you have to be a little more careful, depending on where you're going. If you're going to Australia, yeah, it's great. You're getting 50% off. Canada, 40% off, but who knows how that market's going to go? How long will you take to get that money back? That's more of that play money. Oh, I can have a vacation home short-term rental. If I can cash out, well, who knows? If you're converting back to US dollars, who knows how long that dollar is going to be down, how fast that will sell, although the market's on fire in Australia. I mean, I'm seeing all kinds of stuff. New builds down in Brisbane or freaking Sydney is still expensive. And I mean, all different kind of vacation spots we're hunting. Perth is cool. So it just depends on where you want to buy. Canada as well. Vancouver, there's an amazing ski resort. 7 hours from here, 2 hours north of Spokane, Washington. Beautiful condos, townhomes, and even single family cabins on the ski resort. That's phenomenal. I think it's going to be the next Vail, to be honest. That's just my opinion. I know it's a big statement, but I do believe that resort is amazing. And so that's a great investment. Not only are you getting the 40% off, but they are running those condos, so short-term rentals, the way I'd run them. With the maintenance fees, taking care of the cleaning, all this and that, so you're not getting hit multiple times with the percentages on what you get back for them managing the property. Spot on. Like, I absolutely love and salivate over that mountain. Give me a call if you want to talk about that ski resort. But the whole point is, no one should be telling you what they know. I don't think it's going to dump. I don't think it's doomsday. I've been watching a lot of smart economics, a lot of smart investors, and a lot of smart people talk about how they don't see it dumping, because anytime it starts to go like this, again, there's where all the buyers come back, because we've all been waiting. You've had all these buyers waiting. And then a lot of buyers right now don't mind the interest rates. So when you look at it, my November to December, my baseline's usually, I've been running now 13 plus baseline years of just real estate here in Olympia, Washington. So let's go extreme micro. That right now, normally between mid-November, even early November, all the way until end of December, it was extremely slow. I took the time off, hung out with the kids, family, and I still did. We still did a lot of stuff here and there, snowshoeing stuff and parties, dance concerts, Christmas concerts, you name it. But in between all of that, I was extremely slammed. I did not take a break. I mean, Thanksgiving day after Thanksgiving, all through Thanksgiving, Christmas Eve, New Year's Eve, I was at listing appointments. I was with buyers. I was out there showing properties. I was up in Seattle. I mean, I was everywhere. And it just shows you how much pent-up buyers are already starting to get ahead of the game, instead of my normal baseline with that micro of usually going from mid-November until mid-January is when it'd start picking up. Around January 7th, 10th, 15th is really when you'd start to see that spike of like, here we go again. No, it already started mid-November and it kept going. It didn't stop. So if that says anything about the pent-up demand, will it slow down? And everybody can say, well, that's fine. That micro just bursted way earlier and it's going to drop. Yeah, but I don't see it dropping right now, because I am still running around with listings constantly of sellers trying to get stuff either sold, either at good prices or a little too high, but they're still negotiating, or they're pricing it right to just cash out and use that cash somewhere else, or retirement, or they're moving different state. They're done with the rain here. They're going down, sunny weather, Arizona, Palm Springs, Vancouver, Island or Vancouver itself had one of the rainiest years last year in a 10-decade period. It rained a lot, and it's still raining here. We didn't have much cold snaps, and I'm sure that's coming up, so knock on wood, it's not too crazy in January, but we'll see. With all that being said, again, your investment's huge. Your money's huge. It needs to be invested the right way. If you're just sitting on chunks of money in the bank, I get the percentage, 4.5, depending on what you're doing. You're keeping the hair above inflation. That's great. You could be doubling that, in my opinion, if not more, depending on where you're buying, because not only with the rate of return you can get or NOI on certain locations, but the equity as well with that going up. So it is a double hit. That's where you really can maximize more than 10% rate of return, which is what you should be doing. Because if you're not getting over 10% rate of return on all the money you have, and you're in the bank at 4% or whatever it is, you're losing money. You can say, well, that's the safe way to do it. Absolutely, it is safe. But you do that for 3-4 years, and you could have gone from now 12% up to 30-40%. That's huge. And then you could keep doing that and keep doing that. And worst case is you have those investments that are still bringing money in, but the equity drops a little bit. It's fine. The investments are still coming in. The money's still coming in. And then maybe it's a 5-10 year hold, 15-year hold. You're no time to retire. You're at 40, 41, getting a little older. But you have that 15-20 years still. Now, if you're older like my folks, they say, well, we don't have the time. We're 5 years in, we're done. I mean, they retired years ago, but they keep talking about how they're going to die soon, which is not true. I love you, mom and dad, but you're not dying. And they've been saying that for 10 years now. But that's their thought process with the money. And the catch is we still need to be using your money all the way until that time does happen. And so that's why I still am helping them with investments and buying and selling and taking that money and keep turning it over so it keeps accumulating for them. So if they do go another 10, 15, 20 years, they have all that money still there instead of doing that. I mean, they are going to go on a 6-month cruise next year and travel around and rentals and this and that. And luckily, they were very smart with their investments, bought a lot of rentals. That's where I learned all my stuff from, was my folks, my aunts and uncles, everybody that we all own investments with, rentals and multifamily and everything else with that, and land development and building. That's what you do. And so they were very smart with that. I find the older they get, the more conservative they get, which is fine, but we still need to keep using that money and keep going. Now you can say there's one I forgot, stocks. Absolutely. You can go in the stock market. C'est la vie, do your thing. There's great stocks. There's a lot of money to be made in stocks. I focus on real estate. I stay in my lane. I got my real estate. I know where I'm going. I love to invest in different prime. Basically, I blue chips of real estate. I like blue chips. I like finding the rough ones. I like trying the slums. I find everything in real estate. What can we do? Because everybody's different in real estate. And that's the nice thing about it. It's not just going around and buying, all right, here's a turnkey, here's your 6% on a commercial building or investment building. Yeah, those are easy. If you have chunks of money and you want 6 or 7% and it's high-end money, simple, easy, you know what you're going to get back. The risk isn't much. The equity goes up. And you can turn and burn them, not quick, but depends on what big banks and everything like that. Find big institutions do that, big trust funds, REITs, all that other stuff. Not a big fan. I prefer the lower stuff that we can multiply and spread it out. I want my cash back quickly, depending on what we can do, so we can maneuver quickly. Some of them we can't. Some of them are bigger, but that's fine, depending on what we have. And you have it all spread out. And yes, we have stocks as well. They have stocks, all kinds of stocks. But I like to make sure our money's safe, and most of it's protected in either real estate or different locations where we can cash out. And I'm definitely loving Australia and Canada right now with the dollar, and especially everything's going on micro and macro and global, and Cold War coming. It's been coming. We've seen it for like a year now, the beginning of everything. It's already begun. So that's going to be extremely interesting. Not fun. Just welcome to history. We're living it right now. Bring your money. Get into real estate, get it settled. If you're already in real estate, let me help diversify your portfolio. Let me show you the investments we've been looking at, what we've been hunting, what we've been buying. Let me help you buy your first time home. Let me help you cash out and sell your home and take that money and go somewhere else, or help you reinvest it to bring you back a better profit. All of that. We can sit down. I'll run over all the numbers. I love math, love numbers, love patterns, love seeing all of this. That's it. Long, kept going over it all. Welcome to Real Estate 2025. No one has a clue what's going on. Buy real estate, protect your money, make some money. Captain Ron out. Have a good day.